Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on the gold market. Here actually we've got the same performance on the euro currency, it's downside. And in the weekend, if you remember, we have discussed the tricky moment that we have currently on the technical picture. If we take a look at the weekly chart, you could see that we have two opposite grabbers. First grabber stands to the upside with the invalidation point right there, and it's still valid. And another one we have to the downside with the invalidation point right there. This makes it really difficult to make the decision for a trading process, especially if you trade on a daily time frame. The one of the possible solutions that we have discussed is to keep an eye on the reverse head and shoulders pattern that is forming right now on the follow time frame chart. That could let us to estimate what the real direction will take the lead. So if head and shoulders fails, correspondingly we will get downside breakout downward action. If it starts working, it means that we should get upside action. Not necessarily it will be straightforward upward performance above the OP and rising to the 22 or somewhere, but at least we should get some kind of the ABCD pattern back to the 2021 area. It's approximately 2085, if we'll be precisely speaking. So that's in short our problem and actually the task that we have to resolve. So on a daily chart, we do not have yet some clarity. The one thing supposed to mention is that market starts flirting with the MACD. And today, tomorrow, probably we should get either grabber or nothing. So appearing of the bullish grabber, especially will be in favor of the upward action. And if you'll take a look at the full time frame chart picture, you will see why it is important. Second moment to mention on a daily chart, it's even better looking on the weekly, that we have here kind of the triangle consolidation. So usually on the way up after upper breakout, usually it has the bullish context, not maybe for immediate performance, but in midterm perspective of the few months, we could get upward action here, because the grabber target on the weekly chart stands very close. It just suggests dropping below this area, and if market even will reach 1975 support, or I would say if we even will get this ABCD pattern down, right? So if we'll get, for example, here the butterfly to the downside to the 1940 support, it will not break the major bullish tendency. It will be just deep retracement. So all this stuff is mostly tactical, but still important. So on a euro currency today, we have talked about the same story. So we have bearish tendency, but market stands in a strong support, and we said that now we're watching for some tactical reaction on the support. Some pullback might happen. Approximately the same we intend to do on the gold. If you take a look at the full time frame chart, that's our big head and shoulders. So I will contract the picture that you could see it better. You can see this shoulder, head, that's might be the shoulder once again. So the not really pleasant moment with these head and shoulders is a fast collapse, which has appeared on the slope of the right arm. This is bad sign for the bullish pattern. It is okay when you see it on the slope of the head in the beginning, because here still bears control the market, but here you do not want to see it. Yes, we understand that it's because of the payrolls and so on, but from a technical point of view, this is not good. And in general, you can see that the bullish part of the pattern looks weak. We see much slower upward action compared to the downward, which is suggests that the strength of the bulls is not really very strong. And we see faster downward action where it should be slower actually. But still, despite all these negative moments, market stands in the area that they have specified, and it keeps harmony pretty nice. So it has dropped to the lows are harmonically equals to this one, which is great, and shows first upward bounce. Speaking precisely to this pattern and for the bullish grabber, if you would like to try to trade it and take position here, you will not find better area, because as bounce already started, if you intend to take the long position, you could just trying to catch minor retracement with the placing stop below this level. It will be a very small potential risk, but the chances on success is also not very high. So here's you have to make the decision by yourself. Risk reward will be astronomical because if upward direction starts, you will get with this very small risk great upward direction. But as I said, here is very high uncertainty about this risk significant, and such points I usually call as the culmination points because it gives you perfect and maximum risk reward, but it doesn't guarantee, unfortunately, the success. So whether you would like to trade it or not, that's up to you. You could make the decision. Now, speaking about the hourly chart, that's actually, by the way, it's the same story with this possible position taking. You could recognize here kind of the money hand and shoulders trying to take the position right in 2025 or 2020 or in some retracement, and then just see what will happen after the maybe action will start. So this is just the background of the position taking. Speaking about the bearish context, well, currently I wouldn't consider taking the new short. It's just because market stands at the support and situation with the hand and shoulders, although it looks weak, but it has not totally resolved. So if you still would like to take the short position, maybe you could consider using the stop sell order instead of the limit order, somewhere close to the 2000 even area, about around 2005, 2004, close near the bottom. Because if market keep going lower, it will be everything clear with the hand shoulders, and the downside breakout will be just a question of time. When your stop will be hit, you will just get the position right before the breakout to the downside. If it will not be tested, you will lose nothing just because your order will stand unfilled. So that's one of the possible solutions. Alternatively, you just need to see what will happen to these hand shoulders and then make the decision. But at this point, I wouldn't consider taking the short position by far. So that's actually what we have. Yes, it's just final moments. If you still like get more background for possible taking a long position, you could try to wait for this pattern. So if we will get the bullish grabber tomorrow, right there, it will be a bit more reasons, more background for possible taking the long position. So that's also the way how you could go if you consider taking the long position on the gold market right now. So let's keep watching and see what will happen.